The backdrop of this is rising economics. And as I said in my opening, can we sustain it? Can we sustain a better GDP in Europe? And critically, can we sustain Make America Great Again economic growth in the United States?
Economic fundamentals at the heart are pretty good. I see no reason to expect a corrective recession soon. The thing that worries me is we are still in this post-Lehman age of caution, which means risks can really have a major effect on economic behavior, and we're already seeing this in Europe. The trade tensions are already weighing on risk appetites. In the US, you have a little fiscal offset, so it doesn't quite show up so much in the data. But unless these risks subside, I think it's unlikely we get to the sort of accelerated GDP growth levels we saw in late last year.
Kallum, we're just getting some breaking news from the European Commission Vice President, Mr. Katainen, who's talking in China at the EU-China Forum, and he's saying, look, the US has suffered the most on these aluminium and steel tariffs. Do we have the data to actually prove that?
We don't yet. We have a lot of, say, guns pointing at each other when it comes to trade, but few triggers have been pulled. If I look at the measurable economic effect of the current tariffs, it's very, very hard to predict any effect whatsoever. What worries me the most is the fact that these tensions hang over us, and it affects our confidence, it raises our uncertainty, and that is the biggest impact on economic performance.
Okay, what does that mean going, in the future? If there is an economic impact, are you expecting these trade wars to be scaled down?
There are three potential scenarios. To say 25% chance that diplomats in Washington, China, and the EU actually get their heads together, act in a pragmatic way, and reduce trade tariffs at the margin. There's the we'll just learn to live with it scenario, say 55%, and then there's the risk of all-out trade wars, 20%, which would be de facto like Brexit light for all of us.